Hi, good morning. This is Hyperwave. I'm Leah Wald here with Tyler Jenks. And today, as per the title, we're going to talk about Bitcoin, traditional markets, and what's up with gold. Because we've definitely gotten a lot of your questions about, is gold in a hyperwave? So we'll answer that today. As you guys saw with Trump announcing the tariffs and people saying that we are now in a trade war with China, the Dow did not like that yesterday and dropped 700, 800 points. I believe it was 700. But this morning, actually, we are up. So definitely going to talk about what's going on with traditional markets. Gold is up, Bitcoin's down. So lots of news. Gonna try to grill Tyler a little bit. You see that the pup is dead again. That's a good thing for today. It's not going to bark. And here we go. Tyler?
Great. Good morning, everybody. Thanks, Leah. Yeah, three big topics today. The biggest one for all of us is Bitcoin and Hyperwave, and we're going to take a close look at that. But there are a couple of very big developing stories in the gold market and in the stock market. So I want to take a look at those. All three of the stories have some correlation to each other. It's not great yet, but it could become very great over time. So we're going to talk a little bit about the fundamentals of those three markets. Let's get right into Bitcoin. I will pull up a chart of the current action, which has not been good, but we will discuss that. We're at 83.35 right now, 83.30. Here is just a short-term chart. This is a daily chart of Bitcoin. We can take it up to the top of 19,000, to the bottom of 59.20, back up to 11,780, back down a week ago where we dropped below the hyperwave line. 3 days up, 3 days down. We have not gone back to the lows, but as we've talked about, we have got in front of us, in other words, above us, all kinds of activity. And we're sitting at the bottom of that activity. I was hoping by now we'd be somewhere trying to get through the lower end of all of these Fibonacci lines, horizontal trend lines, downtrend lines, but we're not. We're sitting right here. And if it looks like we're very close to this bottom line, we are, which in a sense is almost as important. It's not as important, but it's almost as important as the hyperwave line, which does not show up on this chart, but we will look at it in just a second. This bottom line is the 61.8% retracement from the very top of the move that occurred from the very bottom at $500 on Bitcoin all the way up to 20,000. If you do a retracement of that, this is the 61.8% retracement line. Now, for those that don't study Fibonacci, that may or may not mean anything, but to me, it's the single most important Fibonacci line on a retracement. It's the most powerful of all the others, and I think is partially the reason we were able to turn up from this huge sell-off the first time, where we dropped below the 61.8% and then got above it, and the second time. Now, both of those points also happen to be on the hyperwave phase 3 line, which I hadn't realized before, and I think is very interesting. So back to just the bare bones. Here we sit. Let's take a look at it relative to hyperwave lines. And I had a bunch of questions when I tweeted out this morning that I made a slight adjustment to the line, meaning the phase 3 line. As you see, we are basically on this weekly candle sitting right on the line one more time. Now, I will show you the adjustment I made by bringing this back. And then what I want to do is I want to increase this part of it to show you the 2 points that I have drawn. They are the same dates exactly that I used before. Once the dates are established when building a phase line, you don't want to change them. And I have not, nor will I. But this first point of contact for generating the phase 3 line is July the 9th. This second one that I'm using is this on September the 17th. Now, the problem with using candles as opposed to open, high, low, close. Back in the old days, the only thing I used for hyperwaves was open, high, low, close. And we would have to put them in by hand because computers at that time couldn't generate them. We're talking pre-Civil War. Well, not really. We're talking 1970s. But when I switch it over to an open, high, low, close chart, there's a lot more precision when drawing precise lines. And what you see here is going specifically through the closing price and the bar itself. And on this date, going specifically through the closing price and the bar. Now, when I switch it back to a candlestick, the problem with some charting when you have to be very precise, which you do in Hyperwave, is the width of the bars gets a little bit confusing. You can try to hit the wick as precisely as you can in the middle of the candle. But on this one, it looks, we had it a little bit too high, which made the line too high where we are at present. So anyway, that's the only change I've made. Now let's go back out and see where we are. You will notice that this did not change in any way what happened 5 weeks ago, what happened last week as we broke down through the line. But I wanted to be as precise as I could before we get to Sunday this week, which is just 2 days away, because it looks once again as if we're going to play the game right up to the moment as we get to Sunday's closing candle. I'm going to make this as big as I can, but no matter what I do to it, you can see that we did break it slightly. There is a wick below this new line, slightly. And now we are slightly above it at 83.21. Somewhere between 82.20. Let me give you the low for this candle according to Bitstamp. The low was 81.14, 8114. So that wick extends slightly below the line. And right now at 83.33, according to Bitstamp, we are slightly above the line. So it's going to be very close. And you can sharpen your pencils all you want, but the graphing techniques only give you so much leeway. As in these cases, we go hundreds of points below it and still get it acting resilient. If by Sunday we're way below it and it's not coming back to it, it's not going to matter precisely where this line is until we get to 8 o'clock on Sunday. And then we can sharpen our pencils once again. Okay, what does all that mean for Bitcoin? Well, going back to this chart, a couple of things are happening here in that because the hyperwave line is coming up, these lows keep getting higher and higher and higher, which is good because where the line is coming right now is actually above where the hyperwave phase 3 line is coming in right now is above this Fibonacci line by a little bit. And next week, it'll be a little bit higher. And the week after that, a little bit higher. So this is acting as support. But at some point, we've got to tackle all this other stuff. We're either going to drop down from here and we will not be in a phase 3 anymore and we'll drop back to 4,000 or so, or we've got to start moving right away. Okay. That's my take on Bitcoin right now. We've got 2 days to go. We will be vlogging on both of those days as we get closer. We'll try to vlog right around the time of the close Sunday night.
Tyler, we got a question. Why aren't you using the wick of the week before September 17th as the second point? Those trades on the wick are valid trades, aren't they?
No, they're not. Only the closes are valid in Hyperwave. They're valid for drawing trend lines. They're valid for all sorts of other things. I'm talking about the wicks. I think this wick at 19,666 at the top is important. That's not the close, but that was the wick. And I use wicks a lot of times. I do not use wicks, never have. I've tried them. I believe the proper way of using hyperwaves is drawing hyperwave phase lines is through the close on for the stock market Friday at 4 o'clock, for the Bitcoin market 8 o'clock on Sunday, and for gold markets and all the rest, depending on when they close, they're weeks out. Maybe that's going to change over time, and I certainly don't mind and would hope that others test all sorts of other ways to be more accurate in drawing these phase lines. It should be clear by now to everyone that these phase lines are meaningful. Now, the question is, in a material world with limitations, what's the most precise way of showing what I call sometimes a field that has width to it? A line has no width to it, but it seems as if the hyperwave phase lines are very, very precise. And therefore, until I see somebody else's work that shows you should use something other than closing prices when drawing lines, that's my reason for not doing it. If we were to draw it through this point, which is what we're talking about now, the line would be much lower and would probably come in at the bottom of this line, but then would be well below what we saw last week and what we're seeing right now. And that's what you see over and over again when you use the closes as opposed to the wicks. A wick on a candle is a one-off event, often caused by capitulation at a top or a bottom, often caused by one or more very large buyers or sellers. The closing price after weeks of activity is not a one-off event. It's true you can make the case that large players coming into the closes of price can manipulate the price to a certain extent. But that's very different than a wick on a single candle in my mind. So that's the best I can do for an answer at this point on that.
All right, Tyler. Oh.
Yeah.
Okay, if we can move to traditional markets.
Yeah, I'm going to move to gold right now, and then we'll move to the stock market.
So it's a question that ties both.
Good.
So with everybody freaking out in the markets about the U.S.-China tariffs, there has been questions raised and also analysts speculating that potentially this will increase interest in both gold as well as potentially Bitcoin as a store of value. Can you talk then, tying in potentially what is going on or not in the Dow in regards to specifically gold right now?
Well, yeah, let's start with gold because of our discussion of Bitcoin, and I'll explain fundamentally what I mean by that in just a second. I'm also going to tie in a bit of a discussion on consensio and moving averages here, because they are such powerful tools. You are looking at a price of gold right up through today. This is a weekly chart going all the way back 20 some odd years, 22 years, 23 years. The reason I showed this long of a period is to quickly answer the question about hyperwave. The answer is yes. But this was one of our examples of funky hyperwaves. I've got two lines drawn here, which I believe the best way of interpreting these lines is this is a phase 2 and this is a phase 3. Now, I'm not going to go into details. Forget those lines are there because the right way of drawing them obviously would be to connect these points as a phase 3. But then you've got to deal with the fact that phase 3 was broken over here. And this phase 4 then would be preceding a 5, 6, and a 7. That's not the way I read this chart. It's funky enough and important enough in global finance that we take a look at this in detail from a hyperwave perspective at another time. So just consider these as working lines that I'm playing with right now in terms of hyperwave. Visually, you know this is a hyperwave because anyone that knows the history of gold knows that prior to this period, 1995 to 2002, we had been going down to flat for almost 2 decades after peaking at $880 back in 1979. So all of that going for years and years and years back was a flat phase 1, waiting for a breakout to phase 2, and then this run up. I kind of look at this as a Bitcoin type of a move in which what we're doing now is not going through a 5, 6, and 7, but we're finding support at a lower phase wave ready to go much, much higher. Okay, enough of that. What I wanted to talk about on this gold chart is the consensio concept of moving averages. And I'm only showing 2 moving averages on this chart. This very long-term blue line and this very long-term red line. Now, the lines themselves are a 200-week moving average and a 100-week moving average and a 30-week moving average. The blue is 100 weeks. The red is 30. Now, remember, those of you that have watched either of our Consensio introductions, what we're trying to do with different lengths of moving averages is to identify bull markets and bear markets. Basically speaking, as opposed to just trading in and out. You can do trading in and out using Consensio by going to shorter and shorter time frames. But as an investor, what I'm interested in is long-term sustainable moves in either direction, including in Bitcoin. I want to either be in it when it's in a bull market or out of it when it's in a bear market. In between, there are all these subconditions which give you places you can take small parts of your account and add to or subtract from until either a bull or a bear market is apparent. But gold is a great example of what a powerful tool this can be. Notice I've got three little circles, this one green, this one red, and this one green. Now, those are the only 3 times since 2002, 16 years ago, only 3 times did you have to make a decision about gold. The first was when the short term crossed above the long term at this green circle. The two never crossed again until this point in 2013. So you just got a 10-year ride without ever having to make a trade. Then we got a sell signal because the short term cut down through the long term. That's the red circle. And then you didn't have to do a thing until this, which is the short term crossing back above the long term. So you were long, you were out or short, and now you are long. And we have not crossed back even after this big drop in price. It did not cross the short below the long, and now we're getting wider and wider. Okay, that's a very long time frame. Let's look shorter. This is what gold has been doing for the last 12 months. Going flat to up. I've got 3 moving averages now. I've got a 50, a 200, and a 14. This is daily. 14 is the short, 50 is the intermediate, 200 is the long. Today, because of all the activity in the stock market and the trade, well, let me put in quotes, trade war, because there is no trade war. There might be, but there is not now. It's just posturing on the part of 2 or 3 countries. And I'll explain what I believe to be true about that in just a second when we talk about the stock market. But on the gold market, we're up 1.5% today. We're up here at 1,347. And we're coming close to this top and this top and this top. This original top was back in September. This top is earlier this year. And this top was earlier this year. Then we pulled back. Now we're going right back up to it. If we take out these tops, which I believe we will, then a number of things are going to happen besides the fact that we are already in an intermediate term uptrend that started back at the end of 2015. So for 2.5 years, we've been moving up, even though it doesn't feel like it because of these triple tops right here that we just looked at. But what the moving average is telling you on the long-term chart is you are back in a bull move. But on a short-term time scale, the reason Consensio wants you to figure out exactly what all of these wavy lines mean when you put them together, because they are telling you that between a bull and a bear market, you can get dozens or hundreds of combinations as price works its way up through all of the moving averages, down through all of them, up through all of them, down through all of them. Now, from a trader's point of view, some people choose to jump in and out and in and out and in and out and in and out. As an investor, you don't do that. As a trader, speculator, gambler, you do that, and you can put significant dollars of the amount that you have to trade in that kind of activity. But I always bring everything back to the long term, to the two concepts of bull and bear markets, and then this very gray area about what happens between those two movements. And we have been in a gray area, but it is clearing up for gold. This is the long-term moving average. It is moving up. The blue is the intermediate term moving average, and it is moving up. The green, which is only 14 days long, is going to swing all over the place as price does. Right here, it was moving up. Now is moving down, recently cut down through the intermediate term 50-day. But now with price up here, it won't take long for the short term to get above the long term. And then we will have price above short term, above intermediate term, above long term, and all three moving up. And if you remember my definition from Consensio of a bull market, price is moving up, and it is above the short-term moving average, which is moving up, which is above the intermediate term moving average, which is up, and which is above the long-term moving average, which is up. In this case, we are very close to that occurring once again, just as we were in this move. Price above short, above intermediate, above long, and all moving up. But since we're only dealing with a 1-year period and a short-term time frame, that can change fairly frequently. On this chart, it rarely changes. Now, the great thing about hyperwave analysis is it's only talking about very long periods and major moves up and down. That's why I like to marry the Consensio concept to the hyperwave concept for long-term investors. And with that, I'm going to, Leah, any questions coming in on the gold charts?
We're getting more questions regarding Bitcoin and traditional markets and marrying them. Let me just see regarding gold. I have them written down, guys.
Well,
yes, one.
Okay.
And I believe it's from Interesting. Thank you. Peter Schiff stated that he believes that gold is a good hedge for Bitcoin, and if the markets drop, so will Bitcoin. Do you see the correlation between the Bitcoin market and gold?
Absolutely. Huge correlation. But it has not manifested itself now because gold is an enormous market and Bitcoin's a tiny market. Gold doesn't care about Bitcoin. But there are people that care about gold and fiat currencies, both groups of which are infinitely larger than the Bitcoin market. Every year that's gone by, the Bitcoin market has established itself as something real, but it is still inconsequential. So at some point, if we get up to $1 trillion, double the size of the crypto market, basically, that will be still insignificant, but other markets will begin to sit up and take notice. And what that would mean would be a closer correlation, inverse correlation between gold and between Bitcoin. And Leah and I talked about this in a very early vlog in one of our discussions, that to me, there are only three possibilities. If you don't mind, I am going to talk for a couple of seconds by getting off of screen share, and then we'll go back.
Actually, Tyler, there's a good amount of questions that are about Hyperwave more generally that I think we can discuss just face to face that don't need a chart.
Okay, great.
So, but yeah, and then also on that, if there are other, if I'm reading this question correctly, inverse relationships of asset classes that you've noticed over the years.
Yeah, we can talk about that at a different time, because all kinds of asset classes are either correlated positively or negatively, and those correlations change over time. Not so with what we're talking about today, which is gold and Bitcoin. The reason Bitcoin exists is because fiat money has been failing, period. The reason for the creation of Bitcoin was the 2007, 2008, 2009 world recession that almost turned into an entire financial meltdown, which would have resulted in the worst possible things you can think of. Think of the worst nightmares you can for civilization, and we came within moments of having those occur. I won't go into details, but we're talking the same sort of effect as a nuclear war, or the same kind of effect as an EMP over the United States, which the most recent report said one of them would take out the entire grid and result in a 90% death rate in the United States within a 12-month period of time. We came in 2007 and 8 that close to an apocalypse. Nobody knows it except a tiny handful of people on the inside that did everything they could to hold the system together. And they barely, by hours, did it. Now, you've never heard me talk so dramatically, but I sincerely believe it. More importantly, Satoshi believed it, and that's why he said, no more of this nonsense. We can't trust the fiat system. We must do something about it. Here is one possible solution. That is the genesis of Bitcoin and cryptocurrencies. That very simple discussion that I just had. Now, 10 years later, has the problem gotten better? No, it's much worse today than it was 10 years ago when Satoshi put this whole plan in place. And the crypto world and Bitcoin has responded by growing from nothing to $500 billion. But that is still not enough to do anything. Okay, what are the other solutions other than getting rid of fiat through a new type of a currency that cannot be inflated because you've got a limited amount of them, and no central government or group of individuals or elites being able to control it? Well, the easy solution for the world is a gold standard. And a gold standard would have to be set at something like $10,000 per ounce in order to be a 40% reserve for the amount of paper currency that is now in circulation. And I won't go into the details of why those numbers are important, but they are. Just take it as an assumption at this point. We will try to do an in-depth analysis of that at some future point. But what I'm saying is there is a way out of this mess. That's the second way. The first way is for Bitcoin to go to $10 million and become the currency used all over the world. The calculation of how big that number has to be is the same as the calculation of how much gold you need at what price, at what percentage rate as a reserve currency to offset all of the paper that has been raining down on us since the 1960s. And somewhere up around that $10 million number times 21 million Bitcoins would get us fairly close. Others have other numbers, and at this point it doesn't matter because we're nowhere near that kind of a discussion. But those are two possible solutions for the world to get out of this mess. There is a third, and the third is a massive default on all of the debt that's been created with all of this paper chasing itself around the world. That's what we came close to in 07 and 08. It is still a viable alternative. But what it would do to the landscape, to individuals, to countries, to corporations, is far, far more excessive than what would happen with either the Bitcoin solution or the gold-backed solution. So that's why gold and Bitcoin are inversely correlated. The stronger Bitcoin gets and the quicker it does it, the less the probability that the world will be forced to go back on a gold standard. The slower it does, and that's why we're talking about how important this hyperwave is, because we might have to start all over again in Bitcoin if we can't hold phase 3 and phase 2. And in that case, I believe we will see gold spike up very greatly. The only way that the world is ready to move to a gold standard, we will see gold start moving up greatly. It will certainly get back over 1900, which was its old high 5 years ago. It would certainly start moving up to 2,000 and 3,000 and 4,000 quickly. When you see that happening, you know the world is on the edge of going back to a gold standard, and they have done the same calculation I did. The price will be somewhere around $10,000 an ounce. Okay, so enough of that. How does the U.S. stock market work into all of this? It doesn't. It is not closely correlated to either Bitcoin, cryptocurrencies, or gold, nor do I see it ever being. It's a standalone that has to do with corporations and corporate profits. The reason we took a big dump yesterday was because some people are starting to get worried that we're going into a trade war. And a trade war can hurt corporations. It can help other corporations. It can certainly hurt countries and help other countries. But for everybody that's hurt in a trade war, there's someone on the other side that's being helped. For every corporation that is being hurt, there are others on the other side that are being helped. What do I mean by that? Well, steel companies and aluminum companies in the United States would be helped by imposing sanctions on countries that are dumping aluminum and steel in the United States. You can go product by product with that, and therefore company by company with that. And therefore, the number of positively affected companies, if they are more than negatively affected companies, the stock market will go up because you've got more corporations benefiting. If that's only occurring in G20 nations, so be it. That's what would happen. Now, at a point in time, you get a super saturated condition where all nations are being hurt, and then you have a depression. But you are getting years and years ahead of yourself to make that jump with what's gone on for the last 4 weeks in terms of posturing of one nation, the United States, trying to go up against what is perceived to have been 30 years of incompetence in terms of a fair playing field of the United States against the rest of the world. That is not a political statement. Anyone that takes the time to understand what the balances have been in terms of inflows and outflows come to the same conclusion. What they don't come to is, what do you do about it? And the previous 5 administrations have shown that from the US point of view, they could not come up with a solution. They simply went on with this imbalance. Now we've got somebody that is saying, I am not going to allow that imbalance in the extensive way it has been. I'm going to try to do something about it. And that's what's causing this friction. Okay, let's go to the stock market and see what that friction looks like and try to put it in some perspective. So what we will do is we will...
Tyler?
Yes.
I think that you'll be able to answer this together in what you're about to do.
Great.
Question. You said that hyperwaves are very powerful and they're validated by time. If the line is touched a lot, does it get weaker like a support line does in traditional technical analysis?
No, just the opposite. The more it's touched, the stronger it gets. Why that is, I do not know. I do not know why the hyperwave is in 7 phases. I do not know why the lines are linear. I do not know why the angles are the way they are. And hopefully at some point, we will get psychologists, sociologists, mathematicians, physicists, and finance people all together in a room for a year to try to understand why technical analysis has any real ability to perceive reality. All of those other groups for years have basically said, we just don't believe it. It doesn't make any sense. Anyone that has studied it knows that that is a false statement, that there are very powerful signals from all these various technical systems. The question is why? And I cannot, nor will try to answer it today, but that's something for everybody always to think about. Why does the hyperwave line get stronger over time and not weaker? I don't have the answer for that, but the evidence is strong that it does. Okay, what you are looking at now is a very long-term chart going back 20 years of the Dow Jones Industrial Averages. We've looked at this before. Once again, try to ignore the lines I've drawn on there. Basically, I'm showing a phase 1, phase 2, and a phase 3 on the Dow, but this is a very tricky one. We went back to 1987 and showed you why it's tricky. What I wanted to show you, though, is where we are after this massive break in the stock market. we're nowhere. We're up at the top. We're just going through a correction that's only been about 10% from all-time highs. So my point is that through all of this period, we were going through the sell-off because of the mortgage meltdown in the dramatic terms that I said a few moments ago. The world came so close to jumping off the edge. Well, this looks like you're jumping off the edge. You're down 50% on a very big index. The NASDAQ was down 80%. The S&P was down 50%, and most world markets were down 50%. So when we came close to Armageddon, you get some big drops. We're down 10% from the top, 10%. Does that mean we're not going to go down 20, 30, 40, 50% if these trade wars heat up? No. But that's one possible outcome of many, many possible outcomes. So let's take a short-term look, which is just going back 3 years. And let's take a look at Consensio. Let's take a look at moving averages. We're looking at 3 moving averages here, a 50, a 14, and a 200. Now, these are very long. They're weekly. But price is now below the short-term moving average. If you go back a month and a half ago, price was going up and was above the short. The short was going up and was above the intermediate. The intermediate was going up and was above the long, and all 3 of the moving averages were going up. That's the definition of a bull market. We've now had all kinds of horrible things happen, and people lobbing $50 billion tariffs at each other. And try to put in perspective a $50 billion tariff relative to a $15 trillion GDP in just one nation, the US. It's tiny. It's a rounding error on the interest on the debt. But it has had an effect because short-term moves, because of news or perceived news, causes either panic or elation for short periods of time. And what we've seen now is this big drop yesterday or for this week, which has not taken us yet down to the lows that we saw 5 weeks ago, but it looks pretty nasty. An 800-point drop is something big. More importantly, we are now below the short-term moving average. And if you can see, which you probably cannot, but the short-term moving average has turned down. Just barely curled over. So the sum total of these big 4 red bars that you see going back 2 months is prices below the short-term moving average, and we've slowly turned down. If I had 100% of my investment capital in the market, based on what you already know about all the subconditions in Consensio, I would probably have taken 5% of it off when the price dropped below the short-term moving average and the short-term moving average dropped down. That's about a 5%er for me. Now, in the coming days and weeks, either that will be reversed and the 5% will be put back on, or I will move to a 10% as other things begin to happen, a 10% move out of the market. And if things get worse, then you take off another 10%. But we are far, far away from that happening. So just in terms of perspective of the way to look at news and long-term trends and short-term trends, I thought it would be useful to go through all the philosophy that we've just talked about, as well as the practical side of Consensio and Hyperwave in making decisions about what you want to do on a daily, weekly, monthly basis with your money. So thanks for listening to that diatribe. It was very enjoyable for me, and hopefully you learned something. Leah, where do we stand in terms of questions?
We have some great ones.
Okay, let's do it.
I'm gonna ask one that's gonna get you a little riled up. So I'm gonna cut you off, Tyler. If you keep going, you ready?
Okay.
Specifically, regarding Hyperwave, have you read Ray Kurzweil's The Singularity is Near? I think it has a lot to do with Hyperwave and tech.
Bingo. Whoever asked that question is brilliant. I've read all 7 of Kurzweil's books repeatedly. The 4 that are the most important to me are in order of his writing. The first one was called The Age of Intelligent Machines. He had 2 others before, but I'm talking to me and your question about Hyperwave. The Age of Intelligent Machines. He wrote that almost 17 or 18 years ago. Brilliant. And what he's talking about is Moore's Law. He's talking about the acceleration, which is exponential in tech. It started with Moore's Law and only had to do with chips, but then it quickly spread into every aspect of technology, which takes us where we are today. All of which was in a hyperwave, is still in a hyperwave, and it's got a long way to go. Well, that's another show. The second book he wrote was called The Age of the Spiritual Machine. First one, Intelligent Machine. Second one, The Spiritual Machine. And that is very close to my heart, because other than the limitations of the material world, the limitations of the financial world, the limitations of trend lines and prices and heights of mountains and depths of oceans and speed of photons and everything that encapsulates limitation, which is the definition of a material world, we've got the real world without limitation, which is the spiritual world. And so for Kurzweil to recognize, he does not believe in God, but he believes in infinite intelligence. And he believes that we're getting to a point where infinite intelligence will be available to the universe. And we are on the cusp of that, which is his third book, which is called The Singularity is Near, which is what you talked about, and is one of the 5 most important books that I have ever read. And I, from time to time, will give you ideas about what I'm reading and why. I've had a number of people ask me, and if you go back to Twitter, you'll find some of my answers. But great question, and you are exactly right. That's what is causing all of this. All of this being anything related to tech. Remember, we've got 4 of our followers that found 4 different hyperwaves, all in tech stocks. Currently going. Amazon, Netflix, Tesla, and I forget the 4th one. But believe me, there's another 25 you can find. And that relates to exponential growth in technology, which relates to hyperwave, which relates to Bitcoin, which relates to finance, because finance has gotten to a point where the exponential growth of the interest on the debt has now exceeded the ability to pay the debt. That's why we're talking about Bitcoin and cryptocurrencies. That's why we're talking about gold, or the flip side, that's why we're talking about basically the meltdown of the fiat system. we enough of that. Okay, sorry. You didn't cut me off. Thank you.
Absolutely. And noted on NVIDIA. I'll definitely, Tyler and I will look at it later.
NVIDIA, the chip company, exactly, which ties in directly to these others. Thanks for remembering that.
Tyler, if Consensio is all down and the price is reaching a hyperwave, how would you interpret that? Would you go long with hyperwave?
I'm sorry, again?
If Consensio is all down and the price is reaching a hyperwave, how would you interpret that? Would you go long with hyperwave?
I don't know what it means if Consensio is all down. If what you mean is we're in a bear market and all three moving averages are down and prices below all three moving averages, what would I do about that? Well, as each step of that took place, if I was in that asset, whichever asset you're speaking about, I would be getting out incrementally as each subcondition took place, so that long before you were in a bear market, you would be completely out. Then if you happen to be shorting, which I think is a very dangerous thing to do unless you are an expert, but if you happen to be shorting, you would ride that down until Consensio subconditions begin to turn up again. Now, what I don't get about the question is how that relates directly to hyperwave. If you are saying that the hyperwave breaks down below phase 3 and phase 2 and looks as if it's going all the way back down to below 1,000, I believe down somewhere around the 800 level, if that were to occur, before that would happen, by definition, Consensio on Bitcoin would be signaling exactly the same thing. They don't run counter to each other. They are complementary, as are all technical systems. It's just what length of time is the technical system measuring, and how sensitive is it to changes in the marketplace. Every trading system is completely different. At some point, Leah and I will start teaching courses on the details of all these various systems, how they interact and how they can be used, not only existing systems, but the ones that I've created, such as Hyperwave and Consensio, and also a third that we have not yet explained to people, which is called the Selgen, SELJEN trading system. That will come later. It's a lot more complicated. But in any case, I hope I answered that question. I'm not sure I understood it.
All right, Tyler, we're going on 2 minutes to an hour. So really quick question. Why linear rather than log?
For Hyperwave, I will show you why in another vlog. I actually use logarithmic superimposed on linear to make selling decisions. We sold our holdings in GBTC up close to 17,000 on Bitcoin, based on using a linear phase 4 assumption and overlaying a logarithmic phase 4 assumption to give us a sell signal. And I'll explain why. But in terms of drawing the original lines, I have found that linear is far more precise than log for finding those original points. Anybody that understands the difference between linear and log knows that the further you go away from the base, the more important the deviation between the linear and the log. And what you're doing when you're starting to draw phase lines is you are limiting the time to that moment in time going backwards. But I will demonstrate it. It's difficult to explain, But so that's my answer. 2 minutes.
All right, boom. I think I'm just double checking. Yes. All right, right at an hour.
Perfect.
All right, everybody, thanks so much for watching. As you know, this is Hyperwave. I'm Leah Wald here with Tyler Jenks. Tyler?
Thank you very much for giving us this time to explain our view of these concepts.
Yep, absolutely. Love your questions. Noted a couple more of them, and we'll definitely keep going. Tyler and I have a couple interesting vlogs coming up. We're going to start talking traditional markets much more often, specifically, as well as we're always going to end with a little bit of Bitcoin price action, of course, a little bit more on economics, and have maybe a little fun debates everywhere in between. So we'll keep you guys updated on everything. And just thanks so much for sticking with us. All right. Have a great day.
Adios.
Tyler.